Righty ho, everyone, and welcome aboard. Thanks for joining me for Trading Buddies on this Monday, the 15th of April, 2024. Glad you could be with me. All right, some interesting developments over the weekend, to say the least, in the Middle East. And that potentially, well, more than potentially, I would think that may well set the tone for certainly today, maybe the week ahead. We will see. Ash will probably have a far better understanding of what it all means than I do. And I'll be talking with him very, very shortly. Of course, you could make assumptions based on market sentiment, risk on, risk off, and I've probably done that myself. Yet I noticed that the fracas, if you like, or the bombardment of Israel seems to mean nothing at the end of the day. And the market is kind of a little bit in limbo, I should think, given that Iran has said, no, that's all, there's nothing more. And Israel said, well, we'll just cop that sweet for now. Do I believe that? I don't know if I believe that, frankly. These people, the Israelites, that is, have a propensity for going tit for tat, if I can put it that way. And yes, I know that the rumors are that they started the whole thing by bombing some embassy or some building. I don't know what that was all about. I'm certainly not a fundamental follower. But I do recognize that we are in uncertain times. And what that generally means, uncertainty, is the market is not going to be happy with that. Are we seeing that at the moment? I don't know. It's kind of in limbo, and I'll defer that pretty much to Ash shortly because as I say, I don't really know what to make of it, to be fair. And I think there's conflicting stories. As I say, uncertainty is the best I can do. And uncertainty generally means that the market won't be in a very risk-on attitude. With that in mind, I've done a couple of things and I'll update you on those positions that I had. Aussie Swiss was one. Aussie Swiss on Friday, as you can see, followed up the Wednesday sell-off, broke through the weekly pivot. Today's candle
We haven't got your
has.
chart, mate.
Oh, hello, mate.
Hi, buddy.
No chart. That's pretty scary because I've been talking for 5 minutes and saying
Oh, well,
nothing.
yeah, I know it's okay. I've actually got a trade as well if
Oh, have
if
you?
you
Okay.
want it.
Well,
Yeah.
we've got tons of time to talk about my stuff, so get into
All
it.
right. Grand. Okay. Well, I'm gonna. I mean, it's at reduced risk because I think it's a bit of a punt in many respects, but I quite like it. So, and I like it. This is the thing about trading. I guess I sort of do a lot of work before the market opens just to kind of get an idea of what I want to trade because of fundamental cotton seasonal bias. But this week, I mean, it's interesting what you're saying because this week the market data kind of churned up nothing in particular. But I've gone for this Euro Kiwi short, and I'm only sort of taking a slightly better than one-to-one position on here. And I've got my stops above the bar 3 days back or 2 days back, I should say, really Thursday's bar here. Big fly down as we saw. We've got CPI data out of Europe this week as well. So I think we might get caught in a range. And this to me looks like potentially the top end of that intraday range. We've got this high back here, and that kind of flows right the way along. So there's a horizontal level here that I quite like for some downside. It might well get through this area, but I'm not sure whether I'd be prepared to hold a position if it gets down there before CPI data. If we're floating in and around, we'll make a choice maybe later. But as I say, reduce risk, mate, because I just didn't find anything that was really in confluence with lots of
Mm-hmm.
things saying the same thing. And you can see there's a trend line here as well. So looks to me like, and actually we'll call it a trend line. It looks to me like a channel, in actual fact. I think there might be a target a little bit lower when you look on the daily. There's a trend line that's flowing through here as well, and that might even be there. Maybe not actually. It probably is from there. Looks like to me there's a trend line flowing through there, which also brings me, there's a horizontal level here. There's a few things in this area that I don't know whether there's far enough for this to go. Of course, if CPI data comes out and it's weak, then this is probably going, well, who knows where it goes, but I think it goes a lot lower. And there's a chance, there's a real chance that can happen. I had a good look through, as I say, some of the data yesterday, and there were some interesting things kind of churned up from the COT data more than anything else. The seasonal data basically suggests buy dollars and sell just about anything else. So trying to find a yeah, well, this is the thing, and if I'm bringing in another trade idea, then it would be the Nasdaq short as well. And we've got a bit of a pullback going on here. If we kind of dive in a little bit further to the numbers, then this would actually, let me just change this chart to one with pivots. There we go. You can see that there's a monthly pivot there, and we've got a trend line maybe there. It could be a little bit lower, maybe there. Probably that's got the most, and this is something I of course I've borrowed from you, mate. There's many perfect touches as I can get, and it looks like the perfect touches are this line here, but I might be wrong. I might, I'm doing this quite quickly, so so they might be a little bit higher, but Nasdaq, difficult one to short. Does it go short straight away? I think it probably does actually when the US market opens up, but there's levels that suggest that could be the monthly pivot. There's a horizontal level here that's a little bit tenuous. Obviously the trend line there is possibly even another trend line a bit higher as well, and of course the ultimate kind of position would be there where there's also a couple of perfect touches. So difficult one to really sort of say where it's going to go from, but the Nasdaq short looks pretty sensible when you think about what happened last week with the data. PPI data came out weaker than expected, but still was hot. CPI data came out hot. We got seasonal charts and seasonal bias, strong dollar at the minute. So so this kind of points to shorting the Nasdaq. I suppose you might want to short something like the Aussie or the euro as well. But it's difficult when you've only got one currency, that's kind of popping its head up. The other one, I suppose, by association, you could say, is the CAD. Could also be one for strength, and there is strength with the CAD with COT data as well. And the fundamentals of the CAD are pretty strong. The issue I've got with the CAD is that they've got the worst unemployment numbers out of all the currencies in relation to how much they jumped last time out. There was a huge jump in unemployment. Looking at it, it looks like actually, I mean, they didn't jump the most, but they certainly jumped. It was a much more significant jump because of where their starting point was and where their ending point was. Seasonally, things are quite flat. That's another issue. That's another kind of big issue actually. Aside from the dollar, which tends to strengthen against most, there's the seasonal kind of bias is a little bit mixed, and also when you go into the longer term time frame, like a month of seasonal data, it's even more mixed. So there's nothing that comfortable that I think we could trade. So I opted for the Euro Kiwi, and one of the reasons for the Euro Kiwi is, number one, the COT data is very strong coming in for the Kiwi, and I suppose you could say not particularly strong for the euro, but that's as far as it goes. And I like the price point. That's sort of like where it kind of where it's sitting right now. I like the price here along the trend line. I like the fact that we got important data later this week.
Not sure if I've lost Ash or
You've frozen my end, mate. So I will come out and go in again.
Could you just put in the chat box that you can, please? Because there's Ash. Was I out of the room?
You were frozen for a bit from my end, and I think I was probably frozen on your end.
You were, yes. Don't know
Okay.
what's going on.
My final point, mate, really was that I like the price point. It's got a weekly pivot here as well. I like the price point, and we got CPI data. So does it pop through there before CPI? Maybe, but I think the chances are it doesn't. Does it get down here? Maybe, but yeah, could get stopped at the daily pivot. Considering that, I think, as you said, that the market looks a little bit uncertain and undecided today. But I've plumped for this one on a price point. It's just not a great Monday to kind of get clarity. Maybe as the week goes on, the clarity appears, and maybe it appears because we have, numbers that are significant. But by that time, markets might well have moved, so there might not be a position to take. But I find it quite interesting that you look at the charts and you effectively surmise what's going on in the background data without realizing it in a way. It's not like you've sort of you've really looked into it. We've just had PPI out of Switzerland, which came in at 0.1, which was in line with expectation. Year on year at 0.2.1. So disinflation from Switzerland we've just had, which again could be, that's a short-term trade. Pound Swiss is at resistance, so you wouldn't trade that. It's not a significant release coming from Switzerland per se. You could probably trade the Kiwi Swiss long if there is an opportunity. I don't know. But yeah, I say, mate, interesting that you've kind of surmised the same thing. Yeah, Kiwi Swiss may well be a long, if it pops down to the lows again.
Interesting.
Yeah.
Okay. I noticed in your analysis that, and it's a thing that goes back to World War II, I think, where the Germans and the English were having their issues. And since this comes from Dad's Army, I think, don't mention the war.
Yeah.
I noticed that you haven't mentioned the war so much. And to me, the developments over the weekend have been quite astounding in the first instance. And now on the flip side of that, just as astounding that we're now at a standstill, and the market seems to be doing absolutely nothing as a response to that.
Yeah, do you know, it's a fascinating one actually, mate, because yeah, I mean, I think, it's undoubtedly kind of a big story, but I've got to say the way it's been kind of reported here is not that it's that inflammatory. It's strange, when you look at sort of something like Bloomberg, it's a different picture. But I think if I kind of was to thumb through the tabloid press over here, the stories not anywhere near the kind of same that the headlines aren't anywhere near the same in the
Right.
way that they've been stated. So that's I think one of the reasons is that obviously kind of aware of what happened, but there's no kind of deep dive into a lot of this stuff. Do you know what? One of the biggest stories over here is that the Prime Minister is holding a dinner party for the Muslim community during
Right.
all this
Okay.
stuff going on.
Yeah.
And people kind of saying, I'm not going to go because they're still funding Israel, but they're not really talking about the actual event in that much detail. So that's the reason, mate. It's not really because I don't think it's necessarily important. I suppose it's more the fact that it hasn't really kind of carried much gravity to gravitas to my thinking, because it's just not been
Well,
reported
I
that
think
way.
the market's displaying that,
Yeah.
which surprises me to some degree, because from where I sit, it's a big deal. The press here are treating it with a completely different complexion, and I've got this thing inside me that says Israel aren't going to stand still and do nothing about 300 odd missiles being thrown at them. So I'm thinking market sentiment's going to be just that little bit risk off, perhaps, which leads me into a defensive frame of mind, given that I've got risk on all over the place, apart from the S&P 500, which I entered last week short. So I'll just go through now what I've done to those of you who may have been
Tell you, mate, before you
privy.
do,
Yeah,
look at the proxy for risk, the gold chart. Look what's
yep,
happening.
yeah, I saw it.
You know, interesting, isn't it, that we got the situation you're talking about, and this is going on. I'll tell
Mm.
you what, I think a lot of people are going to be looking at gold and saying, Give me a chance. Give me a chance to get in." You know, because now it's kind of thundered. Well, unbelievable, really, when you kind of consider these were the areas that we were talking about for so long,
Yes,
and
indeed.
it eventually just swept through them without any kind of issue whatsoever, up
Well, we also said that
15%.
would happen on the fourth
Yeah,
attempt,
yeah, yeah.
and look what happened.
It absolutely has. Yeah. So well, forget the gold bugs. The you know, people that have missed this trade are going to want to get in, and it looks to me the monthly pivot is the target price here to try and get in. But that does mean a 10% reduction in the price of this. Does it come down 10% with what's going on? With this bar suggests it might from last week.
Yeah, it's a big one.
Yeah.
But you would imagine there'd be people taking profit there as well. So that may account for it more than anything else.
Mm. Yeah. Sorry, mate. Anyway, I just wanted to kind of mention that. Probably worth mentioning oil as well, also coming back into play when we can kind of consider the region that we're talking about. Um,
Yeah,
so
I think
yeah,
this is providing a buying opportunity. Absolutely do.
yeah,
And
yeah,
that leads me towards CAD's strength this week. Maybe not early in the week, but if this retraces enough for buyers to get in,
yeah.
I think the CAD will rally on the back of that.
Got to be loving the CAD Swiss then, right?
Got to be, but
Uh, uh,
this war scenario has got me a little bit perplexed. Not so much the war itself, but the
yeah,
reaction, the
yes.
non-reaction, if you like. And you've just explained it to me pretty much. So I've got to have a rethink on that. But here's what I did when I had that news come through to me, which was yesterday midday or something like that. I had Aussie Swissy. Well, I've still got Aussie Swissy long on the weekly chart. We took that in Bali actually, and my stop loss has now moved up to here,
Nice work.
which is about 58.45. So we've taken profit on that, and we're now trailing on the weekly chart. But on the daily, I also bought this at around about that level there on, when was it? Last week before last, I think. I've now closed that order when it came back this morning to our entry level. I took a very small profit on that. So I'm out of the daily because of my exposure to risk. I figured that Aussie Swissy would suffer if the market went risk off. And that makes sense to me. What doesn't make sense to me at the moment is well, I suppose it's coming off its high at the moment. So maybe that does make sense to me. And maybe I've done the right thing there. I'm happy with the decision anyway, because I am exposed to risk on Euro versus the Aussie. So I had that double banger going on. I've chosen to keep Euro Aussie where it is. Very, very, very tight range that we've been in now for the last week or so, since we actually broke clear of that support level. I'm happy to keep that because I think the gold price, and you mentioned the potential opportunity for buyers to get back into or to get into gold if they're not into it. I think Aussie will benefit from gold and gold continuing to rally. Why? Well, the one thing I do know about the Aussie is that I think we've got equal the second biggest supplier of gold in the world. So if people are buying gold, they may well be buying it out of Australia, physical gold, I mean, and therefore Australian dollar should rally on the back of that. Versus the euro, I think I found with the currency, if I can find that somewhere, here we are, the indexes on the currencies,
Oh wow,
dollar,
look at that. Look at
dollar
that
by
dollar.
far and away is a massive buy. And
Yeah.
we said this last week where we had the breakout and retest of that trade line, that this would be a buy last week. That's turned out to be the case in spades, frankly. And once it gets through this level here, which is kind of soft support, soft resistance rather, I think this is well and truly on its way. Whether it gets a bit of a pullback maybe to this level is debatable. But the euro, obviously on the other side of that, is looking as weak as lollywater, and it's exactly the same thing. We mentioned this last week as well. We had the break and we had the retest, so it's a simple A, B, C that we're seeing at the moment. Again, little support level here that it may struggle to get through, and I think that would only provide a selling opportunity if it does pull back a little bit off that level. The Aussie, on the other hand, again, as we pointed out last week, had found support and strong support. You can see the double rejection there with that tweezer bottom sitting there on the Aussie. The cool thing about the Aussie, apart from that, is that it's failed to close below this support level, which has been strong resistance, strong support there, strong support here. It's failed to close below that. So I'm a bull the Aussie over the euro, certainly. And that's why I'm hanging on to the euro Aussie short. Kiwi, I think, is in a little bit of trouble, but there is a support level coming up. So Kiwi could get a bounce off that if it makes it there this week. Yen has, interestingly, very interestingly, popped through that strong support level that's been in place for the longest time, which is interesting because I was a little bit bullish the yen last week, yet it sold off and has gone through that support level. Maybe a retest of that is possible. If the market does go risk off, then that's likely to happen. If the market stays where it is, then it looks like the yen just continues to plummet. The Canadian dollar, similar to the Kiwi, is very close to the support level that we've been suggesting may be the case upcoming. And for that reason, I think the Canadian dollar, whilst it's not a buy right now, and this is going back to what I said about oil, if oil can find that support level we spoke about, the CAD may well do the same. So I'll be looking for limit buys on the Canadian dollar against others if they set up as a nice support level. Swissy, for the longest time, of course, we've been watching the Swissy go up. Now it's going down, and it looks to have broken strong support here. It is teetering is the word I'm looking for, just below this level here, which is interesting. On the daily chart, I'm looking at weekly charts here. So on the daily charts, maybe a little pullback, and then I think the Swissies may be another sell. And of course, the pound, false break, we spoke about this last week as well. Clear false break, come back underneath it, retested it with that buyer bar, and now is showing us that it's on its way down to this support level, maybe around about the 123 mark. So what do I conclude from all that? Well, the only thing I'm really bullish on is the dollar and the Aussie. Everything else I think is questionable. CAD a buy after a little bit more sell-off, and maybe the Kiwi a buy after a little bit more sell-off as well. So bullish the Aussie, bullish the dollar. No real commitment behind the Aussie, but I am bullish that over most currencies, with the exception being the US dollar. And again, if the market does go risk off, then the dollar will just continue to rally, in my humble opinion. So finding trades around that, I have to stick with Euro Aussie short, as I said. I think anything against the dollar, including the S&P 500, on which I am short currently. We traded that on a break and retest, I think, of the monthly pivot, and that was on the weekly chart. No, there was a double cross somewhere. Can't quite remember how I got into that. I've got these black lines on my chart, Ash. If you've got nothing, I want to talk about those black lines.
Yeah, no, I haven't got anything, mate. The only thing I was going to say is that It is the week of inflation. You know, we got Canada's reporting CPI, Europe's reporting CPI, New Zealand reporting CPI, the United Kingdom reporting CPI, and we've got Japan reporting CPI. So it is the week of inflation this week, and one of them will probably, and you think it'd be Canada, you know, considering kind of what happened with the United States, but one of them will probably be the outlier. I mean, it might be more. You know, we might be seeing sort of sticky inflation right across the board. I think when we're kind of looking at what's going on in each region, Europe particularly is finding quite a lot of weakness, and I think the where the euro is the most interesting in some respects is that I think from what Christine Lagarde said last week, they are very keen to lower interest rates, and the reason they're keen is because growth is pretty anemic. So if they're the ones with a weak print, the euro could well and truly be the one to suffer this week. And really, it's kind of how do people kind of, you know, trade those particular markets? And my suggestion would be trade at significant resistance and support, you know, for euro pairs, and see if you can kind of get safe before those CPI numbers come out. Because if they work in your favor, it could be a really good trade. If they work against you and you've got safe, no big deal. So yeah, I think the euro could be the most interesting, but I could be completely wrong. And you know, this is the thing about navigating some of this stuff. The best way to navigate it is get the right price. If you get the right price, then things are a lot easier. So really focus on that this week. Would be my my counsel, mate. But aside from that, I don't really have a lot else.
Cool. It's kind of destroyed. Well, I won't say destroyed, but it's kind of, my argument was with these black lines that they represent the week that Russia invaded Ukraine.
All right.
So the parallel I was trying to draw, and I did this in Sunday Market Update yesterday, was what happened when Russia invaded Ukraine, and is that similar, or can we draw some parallels if indeed Israel does retaliate against Iran? So here's what I did. I marked that date on gold, on the S&P 500, on oil, on the dollar index, and probably a couple of currencies as well. I can't quite remember. But I thought it'd be an interesting view to see what happened. And when Russia invaded Ukraine on gold rallied. It happened midweek this week here, right? The 24th of February 22. This was the week prior, and this was the week during. So gold rallied very, very quickly, hit an all-time high very, very quickly, but came off it just as quickly as it got there. And since that incursion into Ukraine, all we got was downside for a period of, 8 months until gold rallied again. Interesting, really interesting, as how that panned out. So immediate reaction from the world was, let's buy gold, because the world's going to hell in a handbasket. Then common sense, whatever,
Well,
everything quietened down, and this is what
I'll tell you what, mate. I tell you where I think this is really interesting, and actually sort of quite an interesting comparison, is that and we'd have to look back, sort of like, you know, to double check the data, but of course when Russia invaded Ukraine, food prices, oil prices, everything else went through the roof. So you got inflation kind of kicking in. And what's the reaction for inflation? Central banks have to raise interest rates. Raising interest rates and rising bond yields, particularly from the United States, is historically bad for gold. So that kind of like pulls the situation back again. What's interesting this time round, and maybe we do still see you know, some sort of parallel eventually. But what's interesting this time round is that we've seen rising bond yields because we've seen inflation continuing in the United States, and no chance, supposedly from Jerome Powell and crew, that they are lowering the interest rate, and yet gold has rallied. So does this potentially start to spike inflation? Because that's really what we're talking about. So inflation is floating between 3 and 5% in most globally, when we're sort of thinking about the big nations, and that has put central banks almost on the alert. Okay, we could be lowering interest rates pretty soon. So we've seen sort of like bond yields go up, but gold still rally. But a significant problem like a genuine invasion, that could change the inflation picture hugely and spike those bond yields again, and push not central banks into, okay, we won't be able to raise interest rates for a while, but actually into another raising cycle. And if that happens, then it's possible that what you've spotted is something that could repeat, and we could see actually gold come off significantly. Because even though there is concern in the world, the yields and the correlation between gold and the yields kick in again, which they haven't for a while. But high yields, but we still got gold rally. But maybe they kick back in again. So I think that's a really interesting observation you've made there.
Yeah, well, it doesn't end there, of course. There's more evidence to suggest that something is afoot here. And the next one I went to, of course, was the S&P 500, which on the same week as gold rallied, it dipped, right, on the news that Russia had invaded Ukraine. Yet it dipped for the same amount of time, 2 weeks, and then just skyrocketed. But interestingly, couldn't take out the highs, and again went down, 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 down until pretty much exactly the same time that gold rallied, which was October 2022, and of course the S&P 500 just went nuts since then. Correlation there, mate?
Well, do you know what I find interesting about the S&P chart is that the sell-off does coincide with central bank intervention. The buying is slightly more confusing in some respects, except for the fact that maybe we saw maybe just a little bit of easing, not from inflation CPI data, but some easing in some of the other numbers in the background. And I think when we think about the rally that's actually sort of taken place with the S&P 500 and the Nasdaq particularly, I think that market participants probably got on board early because they always want to get on board early, and they were expecting a change and a shift in the financial environment a lot earlier than we've had it. But the momentum has just kind of like kept it going. We've obviously had AI stories and all sorts of things kind of dragging some of those huge companies kind of higher. But it does make this it makes the picture look very, very concerning. If we see something happen again, where it could drive inflation higher again, S&P could drop 20% in a heartbeat, no problem at all. So because what is this rally really based on? It's based on speculation that the central bank is going to come out, and and start lowering interest rates. And if that happens, then companies are going to start making a whole bunch of money because their prices are higher, but their operating costs are going to be a lot lower. But we haven't really seen.
You mean they're not going to drop their prices?
Yeah, well, I mean, this is the interesting thing about PPI versus CPI. PPI does kind of, which is the producer prices have dropped, and they dropped a lot. They drop quite regularly. CPI, which is what's passed on to the consumer, just doesn't really drop. You very rarely get a deflationary environment, so they never pass it on. So companies are going to do better, but and this is the whole thing about growth, is that when you look at GDP in real terms doesn't grow anywhere near as much as nominal terms. So GDP, the money that they're kind of saying, look, we've made this much money, it would seem like, well, there's growth there. But there's no growth there if their operating costs have gone down, but their selling costs have gone up. It's just the fact that they're making more money because of the margin between the two numbers. But I do think that another shock would suggest that the S&P eventually and the Nasdaq eventually would come off so significantly that we see a return to where it broke out from, because the move has been parabolic. And why is it being parabolic? It's very difficult to find the reason for that, except for speculators saying, I want to be ahead. Well, you're not really ahead anymore because there's no value there anymore. So if there's no value there, and the thing that you thought was going to happen, which hasn't happened yet, actually is going to potentially reverse and go the other way. So, central banks actually have to start raising again because of a conflict. Then the S&P and the Nasdaq is going to be in huge issues, and it could really sort of come off fast and hard.
Now would be good time for me because I'm short.
Yeah,
Anyway,
yeah, yeah,
let's
yeah,
go. We'll move on to the dollar.
yeah.
And the dollar just didn't blink really. When I say didn't blink, it certainly didn't have a negative reaction to when war broke out in the Ukraine. It was on a pretty substantial buying spree at the time anyway, but it certainly accelerated very, very quickly after that news came. And up until, is it the same time? It's a little bit earlier. No, it's about the same time as the reversals happened on gold and the S&P, that the dollar, not surprisingly, of course, went in the opposite direction. And now we've been in that range for the longest time. Here's the breakout that we saw last week, and I don't expect that to stop anytime soon. Is that related to? Yeah.
I'll tell you something about this rally, which I found really interesting. I was having a good look through the COT data yesterday. The interesting thing about the move up in the dollar, when we saw where your black line is that none of it, pretty much, can't say none of it, but little of it was driven by commercial traders. Hardly any of it. They weren't involved at all in the rally, which I find fascinating. So none of the big guns, none of the big players were involved in that rally with the dollar. Either, number one, they either missed it or they just didn't believe it for whatever reason, that they were just kind of on the sidelines. So it was speculation. All of it was heavy speculation. And look what the subsequent result was. A big move back down again.
Yep. And
this time's different, by the way.
Almost be 50% nearly, wouldn't it?
Yeah.
On the move.
So this time is a little bit different. We are starting to see some buying from some of the bigger players in the dollar this time round.
Yeah, very strong week last week, and it's not like we didn't see this coming, because that range has been very, very good to us in terms of directional bias for the dollar, and now we're broken through it. I'd love to see a retest of it, to be honest, but I think if you bought the dollar here now and put your stop loss under here, I don't think you'd go too far wrong, frankly. We shall see. Oil is the next one. And of course, oil, when a war breaks out, does things like that. But again, didn't last too long, right?
No. I have to say, I mean, the thing about the oil market is that we are, unfortunately, I just don't have the time to analyze everything, and I can't say, I won't say we, because you might be in a better position than me, but I am not equipped enough with the depth of what goes on with the oil market to really kind of make a true statement about what happens. The war rally was obvious, but kind of since then it hasn't really been that obvious, sort of like what's been going on. I know there was maybe a bit of a build in some of the inventories, and maybe sort of some calming down was kind of going on, and some deals were happening through the back door. But really, you look at oil and think, why isn't this still $100 plus? Because of what we've had sort of in the last 2 years. It's just it's slightly more confusing, I think, when I look at oil in comparison. But I think that's because I don't have all the information. I'm not equipped. I haven't done the digging with oil, because I don't tend to trade it.
It's a beast. It really is a beast, no question. But it's giving me a very, very strong sign here at the moment that I need to pay attention. And to me, it's binary, frankly. And I think a sell underneath not last week, the week before's bar makes perfect sense, because if it doesn't go long, then guess what's likely to happen? It's going to go back into range, and if it goes back into range, then then there's your wrong buyer's point is pretty much right there. So would I be that bold in the circumstances? Probably not, but I can see a break back and a retest of that area as a potential entry. If I had the non, if you like, conflict going around, I would probably be looking to trade that short under there and long above it, well above it, 15 pips above or points above it, I think makes sense. But bang below it also makes sense. So I think it's a binary situation. Am I going to do it? No, I want to see more evidence, frankly. And I don't mean from technical point of view. I mean, I want to see more evidence out of Israel.
Yeah.
I don't know that there's any point going any further, frankly. But I thought that was just an interesting view back in time. If this had escalated, and at this moment it looks like it hasn't, but if it does escalate, I think going back there is always worthwhile, having a little look and see what happened to those indices.
Yeah, I think that's a good exercise. I like that a lot.
Gary, all Euro index are down last week. Mate, I hope that continues, frankly. I'll go back to that chart if you like, the Euro index. And there it is. And like we said last Monday, we had a beautiful look at this, where we had the breakthrough of the support trade line and then the retest of the support trade line, suggesting that if price came back to here, it'd probably look for a support level. That may well be down here somewhere, in which case you're in pretty good shape if you're short the euro. Of course, the little support level may mean that we'll get a bit of a bounce off here as well.
Yeah, and it's going to be a CPI related thing, I think. But the thing about the euro is that they are desperate to lower interest rates. Desperate. It's not like some other central banks. And what's fascinating is you can almost track it through. You got Switzerland going first, then Europe, and you sort of like got this little thing kind of going on in the area. Could that mean that the next one's going to be the Bank of England? I don't know, but you're looking at kind of relationships and who's going to go next. And I think there is now an assumption that the ECB will go next, purely because of the mood music. The data from Europe will be, but I think probably lynched on the inflation data this week, the CPI, the numbers this week, but the growth numbers in the region are poor. And I think that's ultimately that's kind of coming and biting them, and they're going, we can't. What are we? We can't really sustain a higher interest rate level if we want growth. Yes, we want to get control of CPI of inflation, but if we want any growth, we can't sustain this. So please give us some lower inflation data this week, and if we can, then I think that the assumption will be you guys are going to be next to go, and we could see the euro really suffer. But it's one of those things, isn't it? You've got to be careful, because all these sort of different dynamics that you're talking about globally could keep inflation sticky, and maybe start to push it back up again. I think the short-term memory that we have is that we get inflation under 2%, and markets and central banks have rates at zero. I don't think that's going to happen again. I think it's much more likely that we actually bubble between 2 and 3%, and central banks keep interest rates more like at 3%, which actually, when it comes down to it, that's really where when we kind of like think about what money is, and I'm always telling my daughter this, when she's got money that people send her, and she's got them in a little piggy banks, and I say to her all the time that what you've got there isn't money, it's cash, and I won't say fiat currency because she wouldn't understand that, but I say that's cash. So it's not money, because in 20 years time, the money you have in your piggy bank today buys 20 Mars bars, and in 20 years it'll buy one. So it's devaluing all the time. So I think the fact that they've got interest rates higher at least kind of gives the actual cash some value. You know, when it's at zero, it's just totally pointless, and it only really enables kind of big businesses and companies who know how to invest their capital to actually, you know, keep their head above water. But at least this gives the average person who can put their money in a bank account and doesn't need to understand the stock market and everything else, at least it gives them some sort of protection if the interest rate is above inflation, and that's where it should be. You know, I think that should be a rule and a law in every country that interest rates should be above inflation.
I think the reason that you just gave for that not being the case, which is the people who have it know how to deal with it.
Yeah.
That's not going to change anytime soon.
Yeah.
Because it's in their best interest, right?
Yeah. Absolutely, mate. Absolutely. And it's
shameful.
It's sad.
That's the way it is. Yeah.
Yeah, it's sad when you kind of look around at the, you know, the dynamic of things. But this is why financial education is so important.
Oh,
you know.
100%. You know, if they taught me economics even at a basic level, so that you can move forward. I mean, I know I took economics as an elective when I went into senior high school.
Yeah.
But I wasn't listening, so
Yeah,
I didn't get too much out of it, to be frank.
No,
But
yeah.
you know, instead of teaching trigonometry, for instance, who the bloody hell uses trigonometry or algebra or, you know, any? Come on.
Yeah.
And
Yeah.
you know, they were things that you had to have to get your higher school certificate, right? If you failed maths, you were in trouble.
Yeah.
I must have been listening enough to pass. So I guess that's okay. I didn't give you the trade that I took earlier.
Oh no, give us that, mate.
Today. This is my weekly trade.
Oh, nice.
And
I like the look of that.
It's Kiwi CAD.
Oh gosh.
And the conclusion that I get, yeah, you don't like that, do you?
Well, I don't, because I've got a EuroCAD short.
Yeah.
Sorry, I got Euro Kiwi short.
The conclusion that I came to was that really, if there is a fracas enhancement or escalation, then this seemed to be a no-brainer for me, really, because that would mean that oil will rally. It would mean the CAD should outperform the Kiwi, because the Kiwi's sells milk, right, at the end of the day, where the CAD has got oil and various other products. Aussie, Kiwi, long, same story, because if gold's rallying, the Aussie rallies with it. And I thought the Kiwi of the Comdols was going to be the weakest this week, and therefore Kiwi CAD short is my order. If you want to follow,
I like that, mate. I think that's really good logic. Yeah, and you know, as I said earlier on, when I was trawling through the data, nothing jumped out. Nothing. I mean, it was, you know, there's a few things that jumped out on COT data. The dollar jumped out on seasonal data, but when it came down to the fundamentals, it was, you know, well, in actual fact, the CAD was probably the best if it wasn't for that unemployment number.
yeah.
So the market could forget, forget about the unemployment number. And also, we've just had a jump, as I said earlier, we've had a jump in inflation in the States. And you think by kind of association that the same may well happen in Canada. Now, I'm talking about some of the macro data that kind of gets released, but you're talking about a story and a much bigger kind of reason, but you know, behind your idea. And you know, I'm looking at your pattern there and thinking, geez, he's picked it. Why? How did I miss that? Because actually, all I had left over after doing all the analysis yesterday was going, right, well, what's the price action saying? At least give me something on the price action. But I missed that one. Let me just have another look at that. So that's the Kiwi CAD.
That's Kiwi CAD on the weekly, yes.
It's the Kiwi CAD on the weekly. Okay.
Which is where I sort of finish up on Sundays these days. It's like, do I really trust Friday's price action to go into Monday? Not so much. So let me have a look at the weekly charts, and the weekly charts generally tell me at least a direction that I might be able to follow. And
yeah, that's a good one, mate. That is a good one.
This one seems okay to me.
Yeah, I like that. I do like that. I might be joining you in that if I can get a price. I might just hedge out the euro with some of this.
There you
Thanks,
go.
mate. Thank you.
Thank thank me later. Um, George is in the room,
Oh, cool.
but before we go
Uh,
there, I think
uh,
there's other people that have joined since you placed your trade. Do you want to repeat that?
Yeah, well, yeah. I mean, I'm going to feel a bit foolish now, but yeah, let's do it anyway.
That you know how silly that is to make that statement. We can all be right.
Yeah, we can. This is true enough. And actually, mine's a very short-term position. So, okay. So my trade is actually the Euro Kiwi, and it's a Euro Kiwi short. I do like Jeff's trade. Euro Kiwi short, and I've gone short in this area here. My target is just down a little bit, and as I said, it's at reduced risk. I've got a trend line here which I'm trading. This is what I'm really trading here. The weekly pivot here. Now, if this closes above this trend line in the next 15 minutes, so give me an hourly bar that looks like it's broken through, I will close this position. And actually, if anybody's joined now, I wouldn't be trading this yet. If it closes under the trend line, I'd be, if I hadn't put the trade on, I'd be going in for sure. If it closes above, I wouldn't be doing anything. I don't think there's much room. I think it's a 1-to-1 maybe, and the reason I think it's that is because we've got a trend line which is coming down here. And there's a position there. It might be a bit steeper, but it might even be that we've got that going on. There's this going on as well. So there might be a little bit more room, but I think that is pretty much as much as you're going to get out of it. 17800 maybe, that kind of area is a potential target. COT data was pretty good for the Kiwi, but no good for, well, COT data is average for the Euro, no good, and good for the Kiwi. It's actually good for the CAD as well, incidentally. Seasonal data is nowhere apart from for long dollar, and fundamental data is a little bit mixed. But the reason that I liked this one is because we've got the back end of yesterday's announcement from the ECB that they are basically keen to lower interest rates, and we've got CPI data this week. So I think that there could be a little bit of selling, but I don't think it's going to go too far. So I want to try and see if I can get this trade closed before that position opens up. The CPI numbers get reported, and you've got CPI from New Zealand as well. So it's a technical trade, really, just trading resistance and seeing if that resistance will hold. At this stage, the resistance is not holding. So if that remains the case, actually, that looks okay. Depends where you put your line, actually. You know what? That's okay. That's okay. I will use the upper line. So if it closes above this area in the next 13 minutes now, then I will be out of the trade. If it stays below, I still think this is a worthy short, but on reduced risk.
Happy days. Talking about reduced risk, here's George. G'day, mate.
Good day, gents. How are you doing?
Very good, buddy.
We're
Sorry,
okay.
I was just doing some quick trade management in the background. I thought I
could hear cash registers going ka-ching in the background there.
I took a trade earlier on. I've just tightened my stop, New Zealand yen. So my stop is currently just
nobody else likes the Kiwi.
I'm absolutely crying in my beer over this one. I had that short last week and it expired on me. And now look at it. Yeehaw.
So
yeah, we didn't consider the yen, mate. When we talked about all that risk, didn't consider the yen.
Well, I did, but I thought I was already in a risk exposed, three risk exposed conditions, so I didn't think I should add to it. Sorry, George.
Yeah, no, I mean, I've taken off quite a bit of risk. I mean, stop was much higher. So I want to see what's going to happen if we accelerate down. I mean, I'm quite okay with stop is now it's in some kind of a structure. If we come back, we get stopped out, but I think it's the correct place. So what am I thinking? I mean, that's the low of Friday. I mean, there's this big candle here. the bears are strong, we might get maybe to halfway before, anything happens. So which will allow me to then kind of trail the stop down a little bit more aggressively. So, I mean, if anyone wants to get in, your stop has to be up here. Anything tighter, I think, would be a little bit riskier, because you really want acceleration down. Or if you don't want to trade a breakout, you got to wait to see if you get a pullback, right? Test this kind of range and then still jump in. But stop will still need to be up here. So that's the primary focus at the moment. You got to see
I like
how
that, George.
And just
You know
see.
what? I've just on that. I've just taken a pound yen short, which you can bring up. I mean, the price is exactly where we are. If you want, up to you, mate. If you've still got analysis to do, but yeah, didn't even consider the yen. I'm just taking a.
Okay. Let's see. I'm just gonna plump it in here someplace.
Yeah, no problem.
Okay, so
that's
you
I've just taken the short on that. But mine's on the. I was looking really on the 4 hourly. Just like in that, there's a trend line sort of coming up from the above air, from the peak. That looks like it's in and around that area. And also there's the lower trend line as well from the 1st of April, which looks like we're sort of like meeting. We got a meeting of minds kind of possibly going on there. So actually even further back than that, mate, from the 1st of April at 12, is it?
1st of April.
1st, yeah.
Oh,
the very
first
of the first dotted, yeah. The lows around, so between the 1st and 2nd dotted line, the lows, even further back than that. Very first.
You're talking 1st of March, right? Not April.
Oh, is that the 1st of? Oh, sorry. It's 22nd, 29th of March, is it? That one, yeah, that one.
Okay.
Yeah, I like that. I like that. Decent level, I think.
Okay. Yeah, so I mean, the rest is just trade management from now. I mean, if we get it, we do. If we don't, we just keep tracking it. And I mean, that's about it. At the present moment, I mean, on the 5-minute, things change within the next 6 candles or so. So just having a quick scan of my charts. Yeah, I'm gonna hang around here. But yeah, pound yen, the same kind of thinking, even if I was to drill down. If I was to get a bear, if I was trading this, I would look for a bear candle. And then my stop will be above here somewhere. This is now down to the 5-minute. So it's still early days on the Monday, so there's a lot of things can happen. Yeah. So that's
just
kind of
that one, George. Nothing else.
Nothing else at the moment.
Yeah, I think it's a little bit like that this Monday. It's difficult to find something that really does appeal, and then throw in a fracas potential escalation in the Middle East, and you've got uncertainty as well. So it does make for a cautionary Monday, I would have thought.
I think cautionary is, wide stops, cut back your stops when you don't get movement. So, it's equivalent to what Ash is saying, reduce risk. So I definitely don't use tight stops when the market is like this.
There you go. I think we're all on the same page.
Same page, yeah.
Guys, any questions of George, of Ash, myself? Got any thoughts about the week ahead? Thoughts about the Iran scenario? Thoughts about anything? Got any charts that you need to look at or need to show us? More importantly, we'd like to see a trade from you guys. What do you got? they go quiet.
Mm.
Don't be afraid. Don't be afraid to ask questions either. All right. Then if there are no questions, I think we are expired for the day with
Great stuff.
5:55 on my time frame. That's okay by me. How about you
Sounds
guys?
good, mate. Yeah, I think you're
Done?
right, mate. I'm the same. I'm the same. Expired on the day.
We'll
All
catch
right.
up and see. Yes.
Then
All
let's
right.
get the heck out of here and go and do what we need to do. Have a great week ahead, everyone, and thank you so much for being our trading buddies for this Monday, the 15th of April. My goodness me, that's halfway through change of season, isn't it? Winter's coming in Tassie. Better go and chop some wood. Have a great week, everyone. We'll see you next week. Bye-bye.